This video is for educational and informational purposes only. Mutual funds and stocks talked in this video are purely used as examples. This video is not meant for advisory or recommendation purpose.
Did you know that an ETF works like an index mutual fund but trades like a stock? It gives you diversification like a mutual fund but liquidity like a stock. Hello everyone, I'm Swati and you're watching Alice Blue Online YouTube channel. And in today's video, we will learn about what does ETF mean, ETF Example, types of ETF in India, ETF Advantages, ETF Disadvantages, and how to invest in ETF in India. So, what does ETF mean? You have multiple indices in the stock market consisting of a certain number of stocks. For example, Nifty 50 has the top 50 stocks as per the market capitalization, such as Reliance Industries, Tata Consultancy Services, HDFC Bank, and Hindustan Unilever. Nifty Next 50 comprises the next 50 stocks such as HDFC AMC, DLF, United Spirits, MRF, Interglobe Aviation, etc. Bank Nifty has 12 banking stocks such as HDFC Bank, ICICI Bank, Kotak Mahindra Bank, and Bandhan Bank. When you have a mutual fund investing in all stocks of an index, it is called an index fund. A fund house can create the same arrangement and get it listed on stock exchanges. The listed investment product is called an exchange traded fund, that is ETF. Thus, an ETF is a security that tracks an index and trades on exchanges as a unit. For example, Nifty 50 ETF trades on the BSE and NSE, and any money invested in this ETF goes into the 50 stocks of Nifty in the same proportion as those are on the index. Mutual fund houses such as HDFC AMC, Edelweiss AMC, etc. create ETFs. You may have multiple ETFs from various fund houses tracking the same index. In a nutshell, an ETF works like an index mutual fund but trades like a stock. It gives you diversification like a mutual fund but liquidity like a stock. Now let's look into some of the popular examples of ETF. HDFC Sensex ETF, SBI ETF Nifty Junior, UTI Nifty ETF, Motilal Oswal Mid Cap 100 ETF, Motilal Oswal Nasdaq 100 ETF, and Nippon India ETF Nifty Bees. Now that we know the examples, let's look into the types of ETFs. Equity ETFs, Gold ETFs, Debt ETFs, Currency ETFs, and Global Index ETFs. What is the equity ETFs? Equity ETFs track the indices in the stock market. They invest in stocks. The taxation is similar to equities. The short-term capital gains are taxed if you sell before 1 year, and long-term capital gains, that is LTCG, are taxed after 1 year. Gold ETFs. Gold ETFs such as Invesco India Gold ETF and SBI. Gold ETF invest in physical gold assets. They trade on commodity exchanges. The tax treatment is the same as it is on physical gold. STCG are taxed as per the slab rate if sold 3 years before, and LTCG are taxed at 20% with indexation or 10% without indexation. Debt ETFs. The products investing in fixed income securities such as government bonds and debentures are called debt ETFs. Bharat Bond ETFs and CPSE ETFs are example of debt ETFs. The tax treatment is similar to the gold ETFs. Global ETFs. There are some ETFs in India that track international indices such as Nasdaq 100 and S&P 500, thus giving an easy option to take exposure to global equities. Global ETFs are taxed like gold and debt ETF. Currency ETFs. Currency ETFs such as Wisdom Tree Indian Rupee Strategy Fund allow one to invest in global currencies in a cost-effective and simple manner. These ETFs take exposure in cash deposits and short-term bonds underlined in currency and overseas derivative contracts. Now let's know what are advantages and disadvantages of ETF. Low cost. The expense ratio on ETFs is usually 0.5% compared to 1 to 2% on actively managed mutual funds. Liquidity. The price or net asset value of a mutual fund is declared only once at the market close, but ETF units fluctuate during market hours. One may buy and sell ETF units anytime during market hours. Transparency. Mutual fund holdings are declared on a monthly basis. However, the holdings in ETFs are visible on a real-time basis. The holdings will be weighted in an equal proportion as those are in the underlying index. The ETF holdings get rebalanced when index constituents change. Average market return. Since ETFs invest in an underlying index, the returns will be similar to the benchmark index. There will not be the much coveted alpha that fund managers or investors target when they actively pick stocks. Demat account needed. Mutual fund investment does not require you to open a Demat account. However, ETF investment is done with a Demat and a trading account. Tracking error. While ETFs reflect the returns of an underlying index, there could be some discrepancy which is known as tracking error. Now let's learn how to invest in an ETF in India. You can invest in ETFs via Alice Blue. All you have to do is open a free Demat account in 15 minutes and start buying ETFs. Also at the lowest brokerage rate of ₹15 only. Once you have opened your account, you need to log into the trading platform and search for the chosen ETF in the search bar. You can buy it exactly the same way as you do the stocks. ETFs trade at an indicative net asset value on a real-time basis. Place your order, you will get the units at the real-time NAV. The ETF will get credited into your Demat account on T+2 days. You may sell the ETFs anytime you want. You receive the proceeds of your sale in your designated bank account on T+2 days. We hope that you are clear about the topic, but there is more to learn and explore when it comes to the stock market, and hence we bring you the important topics and areas that you should know. Thank you so much for watching. I will see you in the next one. Bye bye.
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.